Hey everybody, welcome back. Well, another wild day to say the least. It's kind of interesting if you look at what's happening here. We're just really forming these little flags right under, and then you're just setting up to break out. It's kind of exactly what you want to see. You have this little peak over here, you try to break, you got Matumboed over here, and then you start breaking out again. And the question is, why now? And it's very simple. You've had some economic data that came out that absolutely crushed it. On top of that, you've had some great earnings. You even had greater earnings this evening. But take a look at this. So CPI comes out today, and we all know the big dog was the Fed meeting. But I think this is really important, and I think it's definitely worth our time to look at this. So CPI comes out. Everyone's focused on the core right here. And the core is supposed to come in at 0.3, and guess what? You came in at 0.2. Now, for reference, what I just showed you and what I'm about to show you is from Trading Economics. It's a free site. You can go there yourself. So the 0.2, not to keep you in suspense, the probability of this happening right here was 5%. That's what JP Morgan had it pegged at, 5% chance of this happening, and it happened. And that's why we saw what? We saw the market just continue to just go higher and higher, right? All right. Now, core inflation year over year, 3.5 to 3.4. Is that something that we should get all giddy and excited about? It's going in the right direction, and I'll take from up to down, but the question really becomes, what are we going to do with it? Well, I was more impressed by this. Now, this does inflation month over month. Remember, the difference between core and regular inflation, the difference is core excludes food and energy. Inflation has everything in it, and you were supposed to come in at 0.1. You came in at 0. You were supposed to come in at 0.3. We're going to get to this in a second and how significant this is, because it's way more significant than people think it is. Now, if you take a look here, year over year, 3.4, 3.3. So you're going, again, the right way. You're coming down. That's what we're looking for, that drop down, right? All right, CPI. This was really impressive to me because we have not really been seeing this. So we have that 3.413, 3.1437, and you came in at 3.1407. So aggregately, prices, absolute terms, and this is what people don't understand about this number. This is absolute terms. You absolutely dropped. That's important to get. And the reason for that is because it's not a relative number. It's an absolute number. Now, we did have a trade today that we did exceptionally well on after hours. I want to show this because it's a really important concept for money management skills for people to get this. But again, here we are. And what are we looking at? Well, we're looking at CPI month over month. And I want to just show you this because I found this to be absolutely glaring. You see that 0 right here? We can't use yellow. That's not going to work. How about black? So you see that right here? Okay. Now, that 0 line. When was the last time that happened? It hasn't. If you go back 5 years, it only happened originally when they started to raise rates. So what we saw and what was scaring people was we were dropping, right? Like we were dropping right here. And then from November on, we started lifting. And then people were saying, well, it's going to stop. And then we had that stagnation period. And we were saying, well, how long is this going to last for? And then what happened? And again, really important. Oh, we were declining. No, we're not declining. We fell off a cliff. Now, this is where it gets super significant. You like that? Not just significant, but super significant. So here's where it gets super significant. PPI is tomorrow. Now, CPI is what we pay when we go buy a burger. PPI is what they pay so they could sell us the burger or the burrito, right? PPI is for the producers. CPI is for us. But tomorrow at 8:30, we're going to get a real good, clear consensus here. We're looking for 0.1, 0.5, core 0.3, 0.5. So they're expecting down. Now, I will say this, if our prices are down, I will be really clear about this. Out of the goodness of their heart, Chipotle did not lower the price of their burritos or lower their costs to help us, nor did Wingstop, and it's pronounced Chipotle in case you wanted to know. So if you have core PPI, here again, 2.3, 2.4, this is exactly what we want to see, 2.5, 2.2, okay? See how year over year's up, 2.5, 2.2? What if this comes in lower than we're expected, like CPI came in? This is exactly what you want to see. Now, with that said, we have what happened with the Fed today. We might as well jump right into that. Now, today, this is the 2-year, and we're going to use the 2-year because it's really going to denote what happened today. So what happens on that CPI? That number comes out, and what happens? They buy bonds, and equity goes higher. We know that, right? Buy bonds, so the yield drops, and that means what? Equity's going higher, and they did. All right, cool. So we understand that. We've gone over that ad nauseum. If you're new to the room, or the community, rather, or the YouTube channel. You buy bonds, equities go higher. And then we just kind of trail around all day and we're waiting for the big event. Around 1 o'clock, you can see they start selling. Around 2, the news hits, and then we see the dot plot. The dot plot tells us exactly what they're thinking out there. Now, today, 7 of them said only 1 rate cut and 8 of them said 2 rate cuts. And all of them are in no hurry whatsoever. So to me, this was really bad. But what was even worse to me was the level of volatility on this conference call. So in other words, from the time that he started speaking, it became really clear that he really was not prepared to the point one of the Bloomberg analysts that was asking him questions actually referred to it as the blazing saddles of FOMC meetings. It was so bad. And I agree. And if you don't ever watch Blazing Saddles, and that's exactly what the guy from Bloomberg said, you need to watch Blazing Saddles. It's absolutely hysterical. So, guy's a national treasure. Anyway, if you see what's happening up here, we're just going all over the place, right? You're rallying up. They're selling the bonds. They're buying the bonds. Then they're selling the bonds again. And this was the conference call. And the conference call went on to 3:15 because every time he was asked a question, every single time, they had more follow-up questions because none of it made sense. And I'll give you a great example. Now, today, what he said was, we're going to move our PCE target up to 2.8. But PCE has already been lower than 2.8. So what people couldn't understand is, what are you talking about? So he starts out with, in recent months, there has been modest further progress towards the 2% inflation. And everyone knows that he uses what? He uses PCE versus CPI. They do look at CPI, and he did mention it today. But he says, our target's 2.8. And they're saying, but the last reading was around 2.6. So do you think inflation's going to go higher? And he's like, well, no. And so they kept asking questions. And the more questions he asked, the more confusing it actually got. Take a look at this. So he was asked, when are the consumers out there, meaning the people that are actually buying goods and services, when are they going to get any relief? They're obviously not happy. They're obviously struggling. And this is his answer. I don't think anyone has a definitive answer as why people are not as happy about the economy as they might be. However, he did say there's a growing economy and a strong labor market. The one thing he said about the labor market was he did include the migrants. I went over this in one of the Saturday videos. They're going to start bringing this up, and why that the labor market's going to stay stronger, even though we're not going to see it effectively. And he ran that. While inflation ran high, he noted that the pace of increases has come down significantly. This is what was fascinating to me, and they absolutely did their job today. I will say that about the journalists today. They did follow up. And candidly, it was nice to see them actually hold his feet to the fire. It really was. So in front of you is the Consumer Price Index for all urban consumers in the food of U.S. city average. Now, you can go and pull this yourself. Okay, you can go right to the Bureau of Labor Statistics and get this for yourself. And what I did was just take it from a period of time. It goes all the way back to 82. But really what we're going to do is just mark the pandemic where Itchy decided to just buy everything and flood the market with money. And you can see how it just rallied. But if you take this level, it puts it right around that 267 level, right? And then you come up here and you're roughly at 330. If you do the math, it's 50%. So in 4 years since this happened, and you've leveled here for about a year before this started lifting, and you can see that. We're in a position here where what you were paying 4 years ago when you went and bought your fancy burrito, or you bought your hot dog, or whatever it is that the crazy kids are eating these days, it's 50% higher on average. And so for him to come out and say that, and they really did hammer him about this, that disconnect, I thought was going to have the markets drop even more. Now, in front of you is a movement from 230 on, and that is from when he spoke, Powell spoke. And now what's important about this is you can see, I'm going to use the U.S. Treasury, the 2-year right now, and you can see how that just kept selling off since he started speaking with wild gyrations, and how the dollar went higher and how equities went down, then up, and then eventually they acquiesced at the end of the day. And I think that's important. But if you go to, let's take the 2 o'clock level and go there and see how that would have played out as well. And that's going to put you right here. Now, if you look at that, did it make a difference? Not really. It seemed to follow the same trajectory. But what I would suggest is that it didn't really help the situation. So that puts us in a position going, really, what now? All right, so from my perspective in looking at this, if we go and take a look at the 2-year and we look at how it acted today, what did we really do on the 2-year? They bought bonds. No matter what we want to say, they bought bonds. If we go and we take a look at TLT, because yield dropped, okay, they sold the long end and they bought the short end. So what happened there? They sold the long end because TLT is price and that went down. And what did they do? They bought the short end. Now let's go take a look at TNX for a second. Here's yield. They bought the 10-year. We can say anything we want about the day and what he said and how crazy the conference was, but they bought bonds. So no matter how I felt about that call, let's go take a look at this on a 5-minute, and you see that drop, and that's from the CPI. So where am I going with this? And I'm glad you asked. What did the market really care about today? Okay? As much as I kept waiting for the market to break, what did they really care about? You see the lift here at 2 o'clock, and then when you start speaking, this happens. What did the market truly care about today? They cared about CPI. And that's the point that we have to always look at as traders. What are they really focused on? So if they're focused on the CPI, then they're going to focus on the PPI. So I think that you should take that data and mark these levels like you do with all your charts. Remember, one of the things that we love to do when we look at the SPY and we see these levels, let's clean this off for a second. We love to take that first bar and mark it off and see how this played out. And what I would do is watch that CPI bar tomorrow on the SPY. I would do the same thing on the Qs. And I would also mark this bar when we kind of fell apart up here and see how we act tomorrow if we trade up there when PPI comes out. I would expect PPI to be decent because there's no way that they're going to drop the cost of things onto us without it being there. Now, there is a litany of names to get into, but this was really important. And I think it was more important than me spending time on the dot plot. I can cover the dot plot for us on the weekend, and there's no problem with it. And so what we always want to focus on as well is, here's the 5-minute on the Qs, and you can see how we're acting. And this is a little bit of a distinction, isn't it? So we're going to put that up here. I'm going to put this on a bear chart so you can see the price up here. But you see how we're lifting here? Now let's go take a look at the SPY. And we went over this yesterday. See where the SPY is? S&P 500. See where the Qs are? See how we're over? Remember when we did this chart yesterday and we said what we're going to focus on is what? We're going to focus on the Qs versus the SPY. Now we're going to go here. We're going to drop this into a line chart. And I'm following this up because I was asked to and said, hey, could you follow this up? Even if I don't respond to your comments, I read them. And lately it's just been absolutely crazy. But you can see this level right here, right? So we're breaking through, we have the retest, and now we're pushing. As a matter of fact, if someone is to look at this and they want to just do the simplest of things, one could go out there, let's get rid of that magnet, and this would be a little bit better. One could go out there and say, hey, that really even looks like a cup. And then someone could even go out there and say, and that looks like a little bit of a handle. And that would be something that we would focus on and go, and you have a cup and a handle, and now you're breaking out of it. So if you took that, maybe just laid the candles there, it's a little rough, but it's definitely there. And now you're breaking out of it. So that means that the NASDAQ will outperform, and that's what you should focus on. And that ties you into what the heck happened today. And here we are again, Apple. We talked about this yesterday and how investors were out of position. It's one of the key things we went over last night's video, how out of position people were on this news. And this is exactly what happens. Everybody comes in, everybody gets giddy, and then they go from there. The goal with this kind of market, when you start seeing these moves, is that you take it, you make your trade, and you get out of the way. Now you can stay with this kind of stuff if you want, but I'm not going to ride Apple down $7 personally. Even as a swing trader, I'm not doing it. It's very rare to make $7 on Apple. So to lose $7 of profit on Apple is very hard for me to justify. So I would watch these levels tomorrow very carefully, but you traded down very clearly and you broke all your support levels today. So you're going to want to watch how that acts coming into tomorrow. Again, we went over this and we're going to do it in great detail on Saturday. But remember, buybacks stop on the 14th. 50% of all companies in the S&P 500 actually stop the blackout. Their blackout period starts. So if that becomes an issue for the markets, they're not going to lift. And this is what we have to focus on. So when we're looking for these levels, I would suggest that you mark them off and use them as demarcation lines. If we look at some of these big dogs like NVIDIA that are trading up after hours and how they lifted, well, NVIDIA got a helping hand this evening, and semis might get that helping hand as well. But I do think there's some things that we have to review here, and we're going to. And look at these lines. It's very clear where your demarcation lines are here. If we go and take a look at NVIDIA's chart, it's an absolute just home run. But you're seeing a theme develop, and we're going to talk about it. So we mentioned this yesterday with ARM, and how ARM's setting up to break out. Here's the push, the all-time high close. And what you're going to watch now on ARM is just up here. And that's pushing on the, obviously, the Apple news. And now you're watching Qualcomm join the party as well. Now that's on the breakout up here. And if you note, I put right here, I put an anchored VWAP right on the peak. And what happened when we finally closed above it, then we finally moved. And now you can see where we're at on that breakout. And it looks great. It's acting exceptional here now. And will this trend continue? I do. I just think it's going to be pretty volatile. Now, we had some really good news tonight that we're going to review. AVGO came out with earnings. The earnings were good. They weren't great. They were good. But the guidance was really good. And the idea that they're going to split their stock 10 for 1, Well, traders love that because this is a super expensive one and it's super thin. As someone that trades this a lot, I'm really happy they're going to split it because I would like the added liquidity. But take a look at this after hours. And this is really what you want to do. You want to position yourself accordingly. So when you see these kinds of moves, people are always saying, well, how do you get in these and how do you stay in these? I would tell you to do it through options more than stock because you're going to mitigate your risk. If you don't like doing that and you don't like doing options, don't do it. Very rarely do I try to trade options that often unless I think I can make multiples. I'm very clear about that. I've talked about it a lot on this channel. I was a registered options principal for 9 years and I have been trading over 2 decades. So you guys do what you want. You try to pick up like 20, 30 cents on an option or 20%, 30%. It's not really what you should be doing. You should be trying to figure out how you're going to get ahead of something and make multiples on it. That's really what you're trying to do because 50% of them are just not going to work and they're going to go to zero on you. You already know it. So you got to make sure that the payoff is worth it. But you see the break and you just started grinding. And one of the things I love is just this very simple trade. You watch the first minute bar and then from there you started to break out. So even if you missed it, you could just buy right here. The other trick that I went through with everybody is just assign that right there. And you just put an anchored VWAP on the breakout of the bar and then you watch it. So all you saw here was the doji. Dojis are signs of uncertainty. You break out and you push. And these earnings, they were decent. Now, for us looking at this, Broadcom earnings revenues beat driven by AI demand. $3 billion in contracts they got, approximately 61% of projected revenue. This is pretty big stuff, what they came out with, trading higher, better than expected, raised guidance, 10-for-1 stock split. Everybody's a winner. And the guidance raise wasn't that big. Maybe I should be more excited about it because, it's 51 billion versus 50 billion, it's a big difference and you are going sequentially in the right direction. But I didn't think it was that big of a deal. Now, one thing I do want to cover, and whenever I say that we're doing a trade, I do like to show the actual trade just to show the timestamps because I think it's helpful for people to see this and so you can actually see what we're doing here and kind of see it and watch along. I'll actually probably walk through this after hours trade that I did this weekend, but when I have some more time. But if you look here, like this is us, we put the little alert out and what we're doing. And we did this on 610, it looks like. So we probably did it right around in here. It looks like trying to get ahead of it. $22 is what we paid for the 1500s. And the stop was 50%. And I've been picking at them. But you have to understand risk management. So let's say a $22 option is a lot of money for you. And let's just say it's a lot of money for someone. It doesn't matter for you, whoever. I don't know the right way, the political way to say that. So it is what it is. So let's just say 22 bucks is a lot to put on an option, right? All right. So this is what I came out with today. And I put this out there at 3:30. The AVGO calls were up 75%. Trim or close them if you're not willing to have them go to zero. See, here's what people don't understand about options. This trade could have been down $100. This trade could have opened flat. These calls are zero. So your $45 options today that you paid 22 bucks for, they closed at like 40, I think. Okay, they could easily have been worth zero. So the goal is to set yourself up for success. How do you do that? You do that by constantly doing the same thing over and over and over again. And you're going to say, well, what do you mean by that? You set up a process and you keep doing that process. So let's say you could only afford 2, right? Or it trades up, you're up 75%. You cut one and then you hold the other one. I'm going to walk through scenarios. Comment in the comments if you want me to walk through scenarios with this. This is money management 101 though. You should be able to do this stuff where you're like, you know what? I'm up a lot in this. I'm going to take half off and then I'm going to come back and I'm going to do it again. Too many people are trying to do the whole GME and we're going to hit once and then I'm done. I have a better idea. Why don't you come up with a process that you can do consistently over decades instead of a process that might work for one day? One is how you're going to create true wealth doing this. And the other one, maybe you hit, maybe you don't, right? But then it's going to be up to whether or not some guy posts the right cat meme or not. So instead of that, I think you come up with a process. So even if you sold 50% of them, you made 75% on that, you reduced your risk drastically because your worst case scenario, if they went to zero, was 25% of invested capital at that point. And then you've lived to fight another day versus zero and losing it all. And then you come in and now you're at 10x, will be 10x on these options tomorrow, if everything opens here. And I think that's a really important distinction. Process, process, process. And this was a fun one also to trade just after hours and you can see how it's going. And I think you're going to have I think it'll have a great day tomorrow. And so again, this is one you're going to want to watch tomorrow. You're going to want to develop these processes. By developing these processes, you're not going to do this trade once. You're going to do it over and over again. And that's really where you're going to make your money. It's the constant process of doing this over and over again. That's it.